Good afternoon, this is Sage live from Kalkine Studio and I hope the trading's going well today. You are watching the market movers, so let us cast an eye over how the market charter is panning out. But before we move forward with the global market performance, let's have a glance on the important updates based out of the Australian vaccine production. Australian vaccine manufacturing has fallen behind after the Queensland University's biotech's attempt to create a vaccine failed to pass the medical regulator's clinical trials. Experts indicate it will take $250 million in collaboration with a major pharma company in order to have an Australian-based mRNA vaccine manufactured against COVID-19 locally. Australia is not seen as a well-positioned locale for vaccine development, with Pfizer, who wishes to focus on current production models, and Moderna, the two current producers of mRNA vaccines for the world, has not made any comments towards the move. The mRNA vaccines use genetic code snippets that work with the body's own protein cells and copies these cells that SARS-CoV-2 uses to infect. The human's immune system then spots the copies of the spike protein cells and develops defences against it. Australia's federal government has invested $1.5 billion in modern manufacturing strategy, and this federal portfolio is now the Attorney-General Christian Porter's responsibility. Australia is on the search for a production partner to cover the large costs of commercial production of a vaccine. Pfizer is focusing on their current supply chain, and although it does have plans to invest $140 million into its Melbourne facility over the next 10 years, the Victorian government also has dedicated $50 million in budget for local manufacturing of an mRNA vaccine in April, and this will be enough to begin the development of a vaccine, but not the commercial production of one. There are questions into why the Adelaide factory, privately backed by Biosina and owned by Pfizer, is not put to good use. It is a large factory space that could support the production of some of the vital components required for developments of mRNA vaccines. Upgrades to the Adelaide factory could make the site a potential space for an Australian licence in production of the Pfizer vaccine, the Australian government hopes. And following the global market's performance, ASX 200 witnessing a sluggish trade during the early trading hours. However, the index later picked up momentum, crossing the 7,100 mark for the first time since last year's March-April market dip. And healthcare, financials, energy and miners majorly are pulling up the ASX chords, overshadowing the tech sector rout. Health stocks jumped mostly in 6 weeks on US dollar strength, while energy stocks are soaring amid rising oil prices. The banks stayed upbeat with ANZ's half-yearly results and RBA's policy update. Overnight, the US stocks finished lower as investors dumped heavyweight growth stocks. And now let us look through the top 5 ASX gainers of the day. The first one is the list of the stocks of the aerial imagery technology and location data company Nearmap Ltd, which surged 15.5% to the intraday high of $2.38 Australian. The stock has gained following a positive announcement by the firm after market close on Tuesday. The firm increased its full-year guidance for annual contract value, or ACV, and expected to deliver ACV of 128 million Australian dollars to 132 million Australian dollars in the financial year 2021. And meanwhile, the securities of Nearmap have now been placed in a temporary trading halt in relation to potential legal proceedings. Second in the row is the stock of the global asset management group Janus Henderson Group, which soared by just over 5% to hit the day's high of $47.04 Australian. The stock surged today with the rate-sensitive financial sector is under the spotlight post the RBA's policy announcements. And third is a stock of Brickworks Limited, manufacturer of a diverse range of building products, rose 4.5% to hit a high of $21.25 Australian. The stock is believed to have surged after the RBA kept the official interest rate unchanged in yesterday's monetary policy meeting. AREIT's sector, which constitute 85 ASX-listed real estate companies, is trading 0.40% higher today. The fourth one of the stock of the general insurance and reinsurance company QBE Insurance Group Limited surged as well, just over 4% to $10.47 Australian. And the stock surged after Michael Wilkins, chairman of QBE Insurance Group, said that the top line of the company had improved meaningfully, with headline GWP increasing 28% compared with the first quarter of 2020, or 23%. Strong market conditions would continue into 2021, as evidenced by the 9% premium rate increase achieved in the first quarter, compared with 7.3% in the first quarter of 2020. Wilkins also said during his address to the shareholders in the annual general meeting. And the last one is the retail stock Super Retail Group Limited, which rose just over 4% to $12.21 Australian. The stock gained after the company released a positive trading update on Tuesday. For the first 44 weeks of financial year 2021, Super Retail delivered like-for-like sales growth of 28%. It was driven by growth across the business. The gross margin improvement has been maintained in the second half, and the share price is now up over 100% since this time last year. Thanks again for joining us. That's all for now. Stay tuned with Kalkine TV for more major updates across markets, commodities and the economy space. Sage signing off for now.